My friend is coming in, Ricky. He's also first time manager. Hey, is that Karthik?
Hey,
Did he tell you my firm's name? Raccoon Capital? That's the name of my VC fund. I was thinking that I should aim for at least 600 million in the first fund. Am I giving you enough comfort?
you're on that edge.
With all the growth, you need to focus on founders' health. Take them to Coldplay concerts.
Don't confuse dopamine hits with mental wellness.
Rat traps. Why did nobody think about it? No VC has funded it yet.
The litmus test for these kind of ideas is you go to 10 other cousins.
All of them love it. We are very tight knit. We back each other so much.
That's the red flag. Every question you've asked me so far is about, tell me a pattern I can match into. My punchline goes, the only story worth telling is the exception to the pattern.
My problem is with the VC model. Why this 7 to 10 years thing? Who's going to back these people who may take 15, 20 years?
Man, that's a tough one.
Let's get started, Karthik. Thanks a lot for agreeing to do this. I was super excited the moment I obviously saw Omega Files 2. I was late for it. I should have seen Omega Files 1. But thank you for coming. The reason was that, a lot of times we speak to fund managers, we do their LP decks, and they tell us stories that we were not aware of, right? And a lot of them echoed the same thing, that there is not a lot of content for fund managers to learn. It's a kind of a lonely battle. They pretty much are on their own. And that's what motivated me, that let's do that. And I think you mentioned that in Omega Files 1, that this is to help other fund managers.
One of the many reasons, but so I feel like so many mistakes have been made in the early days that, you don't have to make those mistakes again. And there's a lot more people to teach now, as opposed to when we started, maybe like a dozen funds, and now like there's 200. So there's so many more people who can benefit. Yeah.
Obviously, there's a lot to talk, Omega Files 1, Files 2. But first thing first, let me introduce you, in my way, to the audience of Carnaama. That's the podcast name. We've started a new series called Carnaama VC Diaries. Just to educate more VCs. We've had 2 episodes so far. One which talks about how to raise your first fund. This was with Ankur from Peer Capital. Second one I did how to move from angel syndication to actually a fund. That was with Dhruv from Eternal Capital and Pranav from Alluvium Capital. This one is about just going deeper into Omega Files, talking about the transparency which doesn't exist so much in the ecosystem. And of course, the byproduct will be how can they learn from your experience? So thanks a lot for coming in. Everybody knows about Blume. Everybody knows about you. And one thing they know is, it is the most loved VC. And one of the reasons why I feel it's most loved is because what you did with even Omega Files. So we are excited to have you here and listen more about this. Thanks for joining in. Just a second, Karthik. Actually, I have to just go and fix my parking. There's some issue there. Just give me a moment. Sorry. By the way, my friend is coming in, Ricky. He's also first-time manager. I wanted him to be on the call so that, he can learn from it. So he's based out of Toronto. He'll be here in a bit too. Hey, is that Karthik?
Hey, Ricky.
Hey.
Chetan, you might be joining.
Yes. He just went out. I think he parked somewhere wrong, and obviously he's going to get into trouble. How are you?
Good to meet you, Ricky.
Good to meet you. I'm so excited because, I have this grand vision, but I don't know how to get to that vision. And, Chetan was kind to tell me that you're joining in today and you're the perfect person to talk to. I'm so excited about talking to you.
Super. I'm excited as well to, chat about one of our favorite pet projects, which is the Omega Files. So.
Yeah, Omega Files. The name is very interesting. You chase the alphas, you start with the alpha, you end with Omega, you bid pretty much everything in between, right?
That's correct. No, the idea was to pretty much make it around, the end outcomes of a VC fund journey or an entrepreneurial journey, which means like when that end is reached, which Omega, by the way, is the last letter of the Greek alphabet.
Correct.
So we're basically writing the final chapter.
First and the last, so pretty much everything in between.
Absolutely.
Isn't that too pompous though?
No, it's not about being pompous. It's about just sharing anecdotal evidence and whatever little we've learned and we apply. A lot of it stays as like fuzzy heuristics. But when you have when you have numbers, you can validate those stories. But it takes 10 years to validate those stories. And so we said once we have crossed the decade mark, then you know that the stories are the data is showing you something, and which you can then share with the world. That's all it was.
Lovely. I have some slides here. It's printed out something. Quite a resourceful guy he is. So, I mean, tell me one thing. I was reading about it. 14 years, 4 funds, and 600 million.
Actually, our core money is even lesser. It's only 475. So
475.
That's it. And so we have another 175 in opportunity and continuity vehicles. But if you look at our growth for the first decade, it was like we were tiny. We were like 20, 60, 100, and 290. So the big step function came only after COVID, actually. So it takes 10 years. I mean, overnight success, wala, cliche. So it took 10 years of like proving that something was going right before investors trusted us with a lot more capital. And that's all we have in primary capital. Rest of it has gone to back like our winners and our ability to hold our winners for longer, which is the opportunity and continuity fund.
Okay, but yeah, I mean, I was thinking that I should aim for at least 600 million in the first fund.
More power to you, man.
Yeah, because the times have changed now, right? Like it's just quite impossible to first get people, who are good and they can come for you and work for cheaper. And I mean, it's a different time, instant gratification. People are buying, freaking Skodas on their Zepto apps. How can I not get these people? I don't know how I'm going to do it, but I don't think so. I have that patience for 600 million in 10 years.
There was a recent article that my colleague and friend Sajid shared, where somebody had blogged about our model is called 2 and 20, right? Mm-hmm. And he said there is the 2% funds and the 20% funds. So you're clearly shooting for the 2% fund.
Absolutely.
Which is essentially make enough of the fees that like you don't have to worry whether the carry comes or not.
Basically, I saw the J-curve slide, right, that you have in, I think it was the second of the files. Where you very nicely, the J-curve that finally you start making money, after 10 years, right?
That's right. And, no patience for that, huh, Ricky?
Yeah. I'm not rich like you. So, and I don't
know. By the way, that's a misnomer. I think it was second or third person who thinks that. There was no rich. There was actually, I was threatening to put out my IT returns, not the graph. So my partners freaked out and said, "No, don't be ridiculous. Like, just put your that's not my salary from Blume. That's my total income declared, and it's not like I have savings. So there's no richness. Just the realization for most, people who think VC is sexy and micro VC is the way to start. You just have to be reconciled to the fact that you'll be subjecting yourself to poverty for at least half a dozen years. See, times have changed. You don't have to start with 100 crores that we did 14 years. So that hurt us for a long time. We've always been building, as you said, the team ahead of time. And so when you want to build a team, that sucks out capital. So as an entrepreneur, you have to figure out, do you take money home or do you give to build a great team? Yeah. And so those are choices. So 8-10 years, tough to make money.
It is.
So your idea of starting with 600 is brilliant.
Right. That's why, you go big or, don't do it at all. Why bother? That's what I was thinking.
By the way, I don't know if you know this, but since you use the phrase, Blume has an annual day tradition of putting out a T-shirt. So we have 10 done, and next week's Blume Day, so our 11th one. First year T-shirt was "Go big or go home," and it was something that Vijay Shekhar used to say. It was something that Val, who sold ZipDial to Twitter, used to say. It used to be on a signature. So it was inspired by the first set of entrepreneurs really from that generation saying "Go big or go home."
By the way, I'm kind of the Blume color as well. How do you like my cap? Has a raccoon on it.
I like it. No, we're very blue all across, logo, colors, everything. So thanks for matching with us.
Did he tell you my firm's name, like what I'm floating? Raccoon Capital? That's the name of my VC fund.
No, I didn't know that. So why the name?
I mean, raccoons are creatures who are very sneaky, but in general, they are very curious and intelligent beings. I want to invest in those unique creatures, unique founders. That's why Raccoon Capital.
I like the name.
Like the name? Okay. I think I'm ticking off all the boxes. I'm liking it. Great team. I have a team slide in front of me. The OGs that you had. How did you get this ensemble together at that time?
Recently there was a podcast I did with Aditya Ghosh where I was asking about the founders of Indigo, and he said it's a very unique set of circumstances. The only pair on the planet who could have built an Indigo. There was no other combination of people who could have built an Indigo.
Yeah.
So sometimes I feel my team build has been that way, right? So it's a set of circumstances that led
Yeah.
you to know people. So we're a very curious mix. None of us are very similar.
Yeah.
Ideologically, we might be, but we're very
Yeah.
different people. And we're
Yeah.
not cookie cutter at all, right? We don't have the classic resumes, and it's not
Yeah.
about making Goldman or any of that.
Yeah.
So I think there's the common thing that binds us is like just enormous trust, so which has been built over years. So
Yeah.
I think in the early days, each hire took 6 months.
Hmm.
We were in no hurry. We didn't have money, so it was not like I needed somebody to
Yeah.
come in. I needed someone to do the work, but like it had to be because they were super passionate about what we were building at
Yeah.
Bloom.
Yeah.
So over a period of time, people who stuck to the principles of what we were building and really wanted to learn were the
Yeah.
folks who got picked up. Yeah, so that was basically how it got picked up. And then if you look at our friend Sanjay and me, we met through Mumbai Angels. So that was
Okay.
the founding. And then Ashish came from my past experience at Times Group. So I'm also this believer that when you actually have when you connect the dots back, all experiences happen for a certain reason. So the reason I talked about the Indigo experience is because I feel like our team has come together in a very peculiar way. That's why Bloom is, I would like to believe while we fall into the common frameworks of how LPs want to view us and how entrepreneurs want to view us,
Yeah.
internally we are very unique,
Yeah.
right? Because it's a very unique combination of people who have
Yeah.
come together. Most venture funds are that way. I don't think you can replicate one set of partners in one firm versus into another, firm and say, let's build like them or let's copy paste from them. It's
Yeah.
very personality driven.
Correct.
And then every year we added, a person. Sajid Fazilboy came from Mumbai Angels Connect, and then Rohan came, and so Arpit, of course, through working in T Labs and being very much like your raccoon persona, very curious, very
Yeah. Yeah.
very clever, very intelligent. And so that was the early build out here. So it was literally a mid-tier investment professional every year, and suddenly we grew to 7 people.
Yeah, yeah. No, thanks for letting me know about Arpit. I may chat to him. I'm looking for team too. I try to keep it very open.
Yeah,
It's
sure,
not that
sure.
I would like to pose
Sure, sure.
behind your back.
Try and tease him out of it.
Yeah, let me try. 600 million first fund, right?
Yeah.
As
I
well.
mean, he'll say, what the hell? I mean, why am I slogging at Bloom? Yeah.
Exactly. But yeah, one thing I don't get though. The first thing I didn't get the Pareto principle, right? Why would
Yeah.
you want 80% of companies to not give you returns? I cannot do that. The 20% that I would probably put money in is, my cousins, friends, and family, because they're asking me now, hey, you're raising a fund, give me some money. I'm like, okay, they're lousy entrepreneurs. I might just give them. But that's the only 20% I might feel might fail because there's an obligation. I have to put money in them. I'm raising from their uncles, from their dads. So, it's just the same money floating.
Yeah, so I think those conflicts you'll have to deal with. If I had to go by that, like going through 3, 4 educational institutions all year, I'll be just funding friends. So in fact, stay away from those conflicts and hire
Really?
somebody else who can evaluate your cousins and friends. And no, just essentially your reputation gets built on how well you understand the investment business or the modalities of being an investor.
Mhm.
So do watch out for that. I think the Pareto is not something we designed. So don't get me wrong. It's not like we cut a check saying, "Oh, ये वो 80% में होगा जो fail होगा." Like that. So I think we've gotten better at realizing that every company's bar has got to be approximately at the same level. It's not you can't look at the bar for one company and say, "Oh, maybe this will get to like only $100 million outcome." Whereas what somebody Sanjay showcased last week will get to $1 billion, but what Karthik showcased can only get to 200 million.
Yeah.
The IC, whatever the IC process you have, you should shoot down the one that you think can only get to 200.
Yeah.
And
Yeah.
you're spoiled for choice. There's good companies all year long. You don't have
Yeah.
to write 100 checks. You have to write 10 checks, right,
Correct.
as a firm. 10, 12 checks. So why apply your head in and do the hard work? It's not about actually one legendary LP, like big American endowment told me,
Yeah.
you guys realize the only resource that I'm backing and that you guys have is your intelligence and time,
Wow.
right? Or money and all is fine. So then it's about how you utilize that. And why the
Hmm.
hell would you go and cut a check into something which cannot become big, or where you're doubtful about a founder's capability, or you
Hmm.
think this company can only get to 300 million, or you're writing, you think it's cute and cheap, so you'll write a 300K check.
Yeah.
God willing, you raise 600 million. Why the hell would you write checks less than 5 to 10 million?
Absolutely.
It doesn't make any sense, right?
Yeah.
So we've had to evolve that because we started in an era where we wrote for 5 years we wrote only 250K checks as the biggest
Okay.
check to start a relationship.
Okay.
That's like tiny. Right? Who, if you go to a founder today, you say, I'm giving 250, he'll say, I don't even want your money.
Yeah.
But the outcome that you could imagine at that point was only 100 million.
Yeah.
So small fund, small check, small stake, small outcome was okay. It
Yeah.
matched.
Yeah.
Today, when you raise 290 million, that outcome is useless. That
Yeah.
ownership is useless. The
Yeah.
deployment is useless. So you have to recalibrate, look for something massive. So this
Yeah.
is the input. Now you say, then why do so many fail? Because my friend, in an entrepreneurial journey, you are picking at the top of the funnel most of the
Hmm.
time.
Hmm.
Whereas the journey is not like a smooth funnel. It's like this one of those endurance courses,
Yeah.
right? It's the Hunger Games or something. So you can think of it a little like the Hunger Games phenomenon, where not everyone's trying to kill you. It's like some of
Yeah.
your competition is trying to kill you,
Yeah.
but there's limited resources. Like you said, I need to go find team members. Imagine the entrepreneur's idea of getting like great like they think they found the best co-founding team. If you see, we presented somewhere in Omega 1 or 2,
Yeah.
co-founders keep leaving.
Yeah.
Co-founders forget about team members, right?
Yeah.
And not after 10 years, after like 2 years, 3 years, 1 year, they fight. Like,
Yeah.
so you built your entire foundation on a lot of things going almost as well as they can, and a
Yeah.
lot of things. And then there's regulations, there is ability to build team. Much
Yeah.
before all of that, there's product market fit. A lot of the times in early stage companies, if you're a Series B investor with a $600 million fund, which is your ambition,
Yeah.
then you worry about a lot of these conditions. So you're actually right. You can be what you want to be, which is the 80% success rate.
Yeah.
Like most private equity growth VC guys will say, I will not play unless I have 80% success rate.
Okay.
So they want close to EBITDA positive. They want, something that can get to 5x. They're not greedy for 20x, 100x.
Yeah.
So that's the early stage game. So because
Yeah.
you're playing for this crazy probability of this company coming down this funnel and becoming profitable, public, unicorn, whatever metric
Yeah.
you want to use to define success,
Yeah.
that is not just here, not just at Blume, not in India, by the way. Just
Yeah.
FYI, it's a global phenomenon for 50 years.
Correct.
The power law and the Pareto play out every cycle.
Hmm. Okay.
You go and dig up a Kleiner portfolio or a Andreessen portfolio or a Sequoia US portfolio. If what you were
Yeah.
saying would, then they would all have 50-60% success rates. How
Yeah.
come we
Yeah.
don't do that? And then doubly within that, there is also this constant economic cycle and churn. So meaning
Hmm.
there's always a buyer looking to buy innovation. There is, all the, we talked about failures. Let's talk even about the good side. So
Yeah.
somebody is building, it's growing very well. Someone makes an offer that you can't refuse because this guy is Oracle or Salesforce and he needs this technology and
Yeah.
he pays 200 billion and you can't, it's very difficult to say no if you get a $200 million cash offer. So
Correct.
a lot of journeys get curtailed along the way. So the power law plays, the mega companies are very rare and few. And the other reason why they don't become super large is because it's tiring. So most entrepreneurs will say, I did everything I told you I'll do.
Yeah.
I got this company to 1.5 billion.
Yeah.
Now I'm tired.
Yeah.
Now I
Yeah.
don't want to go to work every day for the next
Yeah.
10 years and solve the same problem, right? So you have two choices there. Of course, as a VC, you want to exit, and that's a good
Yeah.
outcome.
Yeah.
But suppose, God forbid, that didn't happen, but the company turned profitable, and exactly what I said was at $100 million level, the founder said, let me just sell the business. Yeah.
Yeah.
It's
Yeah.
become tiring, very long, right? And so these are not bad outcomes, but they're
Yeah.
not
This is not
your
bad. Even 200 million is
outcomes.
not a bad outcome, right? Like it's still a good
Not at
outcome.
all.
Yeah.
Not at
Yeah.
all. But trust me, most people will forget $200 million cash exit in 5 years flat.
Yeah, that's true. That's true. No, no, you're right.
And we all play for being on those legendary cap tables. Yeah.
Yeah, yeah, I think you're right. Probably I should change my strategy because yeah, maybe I need to consider those people who will fail. Probably I'm not going to invest in my cousins now. Those 20% I was thinking I would. There's one cousin though. I want to talk to you about a deal. I'll probably warehousing some deals and I can tell you in good trust. So she's building rat traps. I feel the TAM is huge and it's global from day one. Come to think about it, what can go wrong? I'm probably put in 5 million for her because I think she has some vision. And I was coming to your slides, TAM matters or not. I mean, rat traps. Why did nobody think about it? No VC has funded it yet.
The litmus test for these kind of ideas is you go to 10 other cousins and ask them whether they think it's a good idea.
All of them love it. We are very tight knit. We back each other
That's
so much.
that's the red flag.
Okay.
If you told me everyone hates it, they think it's a stupid idea, it's probably the best deal on the market.
Okay.
No, jokes apart, I think the unobvious choices are the ones that are most interesting. I'm not saying you have to back it up, but that's where you want to probe deeper and say, why is it so unobvious? Why is everyone saying it's not possible? Why does the founder also is an intelligent, sincere person? Why do
Yeah.
they think they're obsessed about the problem?
Yeah.
Sometimes it's because the unobvious problems are trying to break the status quo in a very, very complacent ecosystem.
Yeah.
So if you took a small case, when we backed them, they were 2 years out of college. They all three are IIT Kharagpur alums, incredibly smart. It's like straight face, game face every day, right? And like they know exactly what they want to build. And of course, they're inspired by this model being in the US. There was a company called Motif. There was another company, a bunch of them in China. But those kind of business models have to be adapted to a local market. So they were very
Yeah.
confident that we can build one for India.
Yeah.
Right? So me being me, of course, I knew people in the securities market. I worked in financial services. So I sent them to a bunch of people and said, "What do you think?" All of them trashed it. All of them,
Okay.
right? So they said, "Nothing like this will ever work."
Yeah.
And one after the other, one after the other, one after the other. And it's almost like it breaks your conviction at one
Yeah.
level. So
Yeah.
how can I and this 24-year-old be smarter than everybody else in the
Yeah.
market?
Yeah.
I'm telling you, it would have been 50-50 if not for Nitin Kamath saying, I like these guys, I'm going to back them. I think it's a great idea. So just took one guy out of the 10.
Okay.
So
Okay.
I think where the market is heading, this could be a very interesting product addition to how people think about
He
it.
said that back then?
He co-invested with us.
Oh, lovely.
It was one of his first ever investments out of like his Rain Matter idea.
Oh, nice.
First one of his first ever investments. So in fact, they were housed in his office in a co-working space for like the first year or so. So we co-invested with him. We got like the same deal. We got like a super attractive deal.
Yeah.
God bless Nitin and the small case team. I think they'll do very well for us. But I'm just saying, don't go with the obvious. And if it sounds too obvious to the common person, the risk is not that it's not a great idea. You can
Yeah.
still build a good plan, which means that 20 other people can copy it. So what is the IP of that great rat trap? Like Greek yogurt, for example. Chobani was the pioneer and ruled for 5 years.
Correct.
Now every departmental store shelf has 10 Greek yogurt brands.
Yeah.
So it can get whatever can get replicated. It's difficult to build a category
Yeah.
unless you've got some element so right that distribution could be distribution, could be a
Could be
magician.
distribution.
You could have worked in Walmart and Sam's Club before, and you know exactly how to get to those shelves, or
Yeah.
Home Depot. Rather, this is more appropriate for a Home Depot or ad trap. But my point is, or B2B sales, and you can get like millions of them to the New York subway who need these. Right? So,
Yeah.
so if you can bring an edge, then you win. If you're just like a happy-go-lucky, passionate entrepreneur without having an edge,
Yeah.
then these commodity businesses don't go very far.
They don't go very far. Okay. I still have huge conviction in her, by the way. So
That's one part of it always. I mean, the
Yes.
founder keep evolving. We call them a billion-dollar founder. And some avatar could be in the third starter, but are they a billion-dollar founder?
because look at your slides, right? I think she fits the bill. The TAM slide that you have, the large TAM versus niche TAM. The large TAM people, they give more return, 7.3x. That's what is
Yes.
there. Then the next slide is about early arrival or on time. I think it's not early because people have sold rat traps for too long now. I think now it's the time for new kind of rat traps. Nobody knows a brand that this brand is for rat traps. For me, it's on time.
Okay.
8.4x. I mean, this is what your slide says. So I'm gonna back her for sure. But these slides are great, to talk about these things because otherwise I didn't have enough conviction in her until I saw these slides.
No, idea was to give frameworks on what has worked. But
Yeah,
the funny thing about all these slides or in general learnings are
yeah,
that actually all we've offered is a probability meter. So people have hypotheses, right?
yeah,
So
yeah,
like you say, does TAM matter?
yeah,
Does a second time founder matter?
yeah,
A multi founder team matter?
yeah,
And there's always debates. So all you're saying is that if the data is showing consistently that the probability of one sample set is better than the other in terms of
yeah,
delivering higher returns, the
yeah,
chance of that happening when you pick someone is higher. But
yeah,
it's never a probability of close to one. At
yeah.
best, it'll be like a 0.5 or zero point 0.7 or zero point 0.8,
Correct.
right? And there's a multiplicative probability. Like you
Yeah,
said, she as an individual is a zero point 0.8 for me. She's a billion-dollar
yeah,
founder.
yeah,
You
yeah,
said taking a large TAM,
yeah,
but it's still not selling diamonds, right? It's selling rat traps. So let's say points 0.6 because it's
yeah,
not as it. The same old
yeah,
archaic products are there. There's no
yeah,
some cool, mechanisms given new technology that can build for super cheap.
yeah,
So she can reimagine the entire product. So she doesn't have to. She doesn't have to build an expensive rat trap. She can build a
yeah,
very sophisticated, cheap rat trap.
yeah,
So that say, yeah, but like, will people appreciate it in a rat trap? In a ultra human ring, which is charging right here, like in
yeah,
ultra human ring, all of that jazz is 0.9,
yeah.
right? In that trap, it's probably 0.6.
One
It's
six.
the
Yeah,
application, right?
yeah,
So you have these set of probabilities. Now, when you multiply them, they actually slip to like zero point 0.3 or zero point 0.4 because it's always a product of probability. So I have a rule of thumb. When you're starting in an early stage, I think if you ask me in our life at Bloom, or if you ask any other manager, I don't know if they can put a
mm-hmm.
number.
Mm-hmm.
Uh, what was the probability that you ascribed to a particular company becoming a $1 billion company?
Yeah.
The number will never be more than zero point 0.2, in my opinion, in my humble opinion.
Okay. That's the
Yeah,
Pareto again.
because of all of these multiplicators.
Yeah, yeah, yeah.
Right?
20,
And if
20%.
it's better than that, then my God, if three other people will be taking the bet. If
Yeah,
it's even better than that, if it's above zero point 0.5, private equity will be taking the bet. 0.5 is when growth venture capital comes in. 0.25 is when maybe Series A comes in. It's not like a perfect science. That's how I view risk mitigation and try to understand what am I subsidizing in terms of risk,
yeah,
or the bet has got to be so crazy that if it does work, then it's not $1 billion outcome, but a $25 billion outcome.
yeah, yeah. That's what I'm
I
hoping
mean,
for. Yeah,
yeah, historically you couldn't imagine those numbers, but today you can. I mean, you're sitting in the Western Hemisphere, you can imagine those numbers. But in India, above 10 billion, there have been maybe 5 outcomes so far, right?
yeah,
Or
yeah,
6, 7. So you can't simply sit and say, oh, I think this can become 20 billion. Bullshit.
yeah.
You've never seen something of that scale.
Correct.
So that's kind of been how we think about playing. And that's why these probabilities and this data is useful. You're just
Yeah.
saying, does it fit all of these criteria? Why am I even playing this check?
No, no, you're right because now I'm beginning to think it's not that I have lost any conviction in her, but she's a single founder, and that's again a slide that I'm coming to, and now I'm thinking, piecing it all together, that probability is now coming down, which is a risk because it says that single founders is a risk, but have you seen any exceptions there?
So always
Yeah,
exceptions. Every question you've asked me so far is about tell me a pattern I can match into because
yeah,
that's how we think, right? You want to
yeah,
slot them into certain patterns, but
yeah.
as the second half of my punchline goes, the only story worth telling is the exception to the pattern.
Yeah,
So
that's
is
true.
she the
I read
exception?
that and I really liked it. It was like kind of I was blown away. I'm like, how to comprehend this?
No, because when you go and look at everyone
Yeah,
and oh, this guy had it easy. Like you'll look at Dipinder and say, oh, did he have it easy? No, Dipinder almost ran out of cash 3 times,
yeah,
right? He was building a different business and then Swiggy attacked him on a different front and he
yeah,
still managed to improve. I think even the best stories, they will have some elements going for them. I'm not saying they're coming against all odds and they fail on all counts, which is
Yeah.
why when you saw the grid that we presented in Omega 2, where we took our hit companies, the
Yeah.
17 hit companies,
Yeah.
and mapped them on all these same criteria that I presented. Were they green lighted? No. A lot of them were, yellow on a lot of factors.
Yeah.
So all I'm saying is you have to have some greens, right?
Yeah.
Which is in one team might be a single founder, but they will have a lot of green elsewhere.
Yeah.
In one team, there will be three founders, but they'll have a lot of yellow somewhere else,
Yeah.
right? So that's kind of what we realized, that
Yeah.
you can't pattern fit to perfection. So the other crude analogy, if you any of your viewers, I have two MBAs, and so there's no secret about it. So I've
Yes.
gone through the application process a couple of times, and the IM ones are very different because all you had to do was crack
Cat.
the cat
Yeah.
and land up for the interview, and if they thought they were smart enough in the interview, selected. And then
Yeah.
you went to the Wharton thing, and it's not about one or two criteria; it's about 10 criteria.
Yeah.
So they want to know what your scores are, what your acads are, what your work experience is. They want to know how good your essays are, what your motivations to build are, etc. So
Yeah.
similarly, you're evaluating an entrepreneur, and you say, "Yeah, ये तो single founder है. I don't know whether this
Mm-hmm.
fits into my framework."
Yeah.
Then what you should do is over-index on, are they compensating factors? So by the way, even at Wharton, there are people who get 600 and 620 on the GMAT and get it. So as per logic, they're not intelligent people. No, that's not true.
Yeah.
Their work experience has shown that they're incredibly intelligent, right? They might not have math reasoning, but they might be brilliant orators, right?
Yeah.
And then there is the question of, are they founder market fit? So if this person is a fantastic fit for what they're building,
Yeah.
maybe they will have an arsenal of people that they can hire from that industry
Mm-hmm.
who will make for a formidable co-founding team, not
Yeah.
necessarily a co-founder. So to your point, do we see exceptions? All the time. So by the
Mm-hmm.
time you reach four, you're seeing seasoned executives from an industry, you're seeing second-time founders.
Yeah.
They have figured most things out from what
Yeah.
they're trying to solve,
Yeah.
right? And so they're not forced, they're not waiting to find like a cool college friend or a unicorn colleague as a
Mm-hmm.
co-founder. That's what you see a lot of.
Yeah.
They're saying, I'm very sure of my capabilities. I can hire a great team. I'll
Yeah.
give them solid equity. I'd rather give 5 people 10-15% of my firm rather than one other person, guy or girl, like 25% of the firm, and
Yeah.
know for sure that that person's going to do the work worth 25%.
Yeah.
So don't fall into these traps of like perfect formulas,
Yeah.
but look at it as a spectrum of risk and see what compensating factors are there.
Yeah. What you feel right from the heart, right? Sometimes you have to go for that. Like
Yeah, it's all of venture over a period of time is how you train what they say is the gut, right?
Correct.
So this is all training of the gut. So
Yeah.
it almost becomes intuitive later. It's not like you're saying, oh, where is it in the framework? That said, because we have to train the next category of folks in the team,
Yeah.
we
Yeah.
try to put these frameworks so that people are debating it at least, which is a
Yeah.
good thing.
Yeah.
You debate it. If it creates a lot of doubt, you should walk away from the deal. If
Correct.
you don't debate it and you simply go by gut, that's angel investing or seed investing, and I can't afford that anymore when I'm writing $2, $3, $4 million checks.
Yeah.
So you can't
Correct.
make a mistake on gut, right?
Correct.
So that's how I think of VC evolves. That's where we've gotten to in 14 years.
Wow. Gut intuition plays a big role. I mean, I always thought that, but I didn't know that it takes a lot of guts and pattern recognition to do it together. I mean, that's classic design thinking also, right? Like intuition plus
Yes.
business together. So good to know it has some application. I was taught that in my school in Cincinnati because Procter & Gamble has championed design thinking. But today I got the real meaning of it, at least in the startup world, right? Lovely. So, when you were talking about, there was one slide that, the near death experience, and you mentioned Dipinder, what he also experienced. I don't think so. I knew about that. The resilience and the mental health for me, as a differentiator, I would say I want to focus on that, where you need to focus on founders' health with all the growth and everything. And, I feel that this is something I would like to be, championing and maybe a differentiator, that we will back founders and make them good, make them resilient, focus on their mental health, take them to Dalai Lama retreats or Coldplay concerts for that matter. But how important is that? What do you guys do about that?
I would love to do more. So I think it's a luxury of how the fund is set up or what your positioning in the market is. If you want to position yourself as that, I think it's a great positioning, by the way. That, by the way, is not about going to the Dalai Lama retreat and the Coldplay concert, right? So I've seen don't confuse dopamine hits with mental wellness, right? And as much as I would like to do that, the idea is to use them to bond, of course. And while they get the dopamine hit from the Coldplay concert, the idea is, what did you do before and after the concert? So one is, did you create that safe space for them to have a conversation with not just you, but maybe a small cohort of people they can trust? It's not about going and being in the mela of like 20 people or 50 people. Some of that is valuable. Like, of course, you can go to a cricket game and you can sit in a box and have a chat there. All of that is valuable. I'm not saying no. But the precondition, which I was alluding to, is that do they trust you? Have you built a relationship where they trust you with the most vulnerable aspects of their personalities? Otherwise, it's all like lip service, right? It's like you'll talk a little bit of shop and whatever was in the boardroom, you'll talk one more layer, but they're not getting into personal issues and mental wellness, and that's what you started with. That's not happening with that approach, in my view. So it's non-trivial, I feel, and I think one of our superpowers is because we do super early stage. Most of our journey discoveries at that first 2 years, you have no choice but to actually deal with all of this. How you deal with it is what makes founders and us click, I feel. Right? And that's the persona of the firm. You can't like engineer. If you don't have, and that goes back to what we started the conversation with. If you don't have a set of team members who relate to that, that empathetic tone and how they deal with founders, you can never hire it or build it, in my view. It's a part of our hiring code, right? If there's not a strong culture fit, we won't hire. They're extremely intelligent people who will do well in other firms, but I don't think they're going to bloom, right? It's yes, my LP will say all I care about is performance. I think I have some proof points, and I'll show a lot more hopefully in the next 5 years. As you see the Omega's role, you'll see the performance meter. But I'm saying we'll show a lot more proof that you can actually have this unique firm, which has built a really unique genetic code across the firm that we can cater to, like, how a founder goes through their journeys and yet delivers superb returns. Because that's, at the end of the day, that's the only job that was given to me. Like, all of this other stuff is all cool, but like, who cares whether you took them to Coldplay, Dalai Lama, or had a one-on-one chat for 1 hour? They only say at the end of the day, did this company deliver? Like, did it become a $2 billion company? Is it like 20 bagger? Is it like 40% IRR? That's all the LPs ask.
That's what LPs are asking. That's what, right? Like, but you care about that. Like, if they get to 2 billion, but they're not they're stressed out, they're not taking care of their
absolutely. So, no, as I said, I think that's what makes us unique, because I think we don't. But to your point, why don't we do more of it, etc.? I think doing structured, programmatic interventions on things like mental health, etc. Even with your siblings and parents, which I sometimes go through, there's only so much you can do. You can't push them to it. You got to encourage them and make them work on themselves. And not all of them do that extremely well. We are all vulnerable as humans, right? So it's not, you can say brilliant entrepreneur, but, doesn't work on his health. Brilliant founder is hitting it out of the park, but, is a mess mentally, or doesn't build a great culture internally. And it's not a click of a button kind of a solution, sadly. If they're not willing to put in the work, what are you going to do? Are you going to sit in their office all week and chaperone that, enrichment mentally or physically? You can't do it. So be very encouraging and be very subtle about it. And you can nudge them and you can push them. But And you have to earn the right to be able to do all of that in the first place. That was what I meant by precondition. But you
Yes.
bring up a very important point, and so I'm glad we're spending time on it. But that's my summary on it.
Good to hear that. I know you like concerts. Which was
Uh,
the last one you went to?
I did manage to do the Coldplay in Mumbai. I'd done the Coldplay a couple of years
Now
ago
you
in
talk
May.
like VC. You're the only one who got that ticket.
No, not really, not really. A lot of people who like tickets, but yeah, but you still have to use your well-earned brownie points somewhere in life to extract a ticket here and there. But
Exactly.
definitely didn't get it on the clicking mechanism. I'll be honest.
Yeah.
But I think India has a different vibe around concerts.
Yeah.
I've experienced them across Europe, North America, and India. India is a different vibe. You have to either be with it or be zen with it. But yeah, it's good fun. I go for the music more than the crowds necessarily.
I went to Post Malone. It was really good in Mumbai. It was a very
But Canada must be rocking with concerts, no?
like right
You haven't
next
been?
door. So where Chetan lives, I keep coming here. There's a Scotia Bank Arena which holds like about 45,000 people. So true story. I was just walking to buy my groceries and I saw these all fans. All looking alike. I think it was 21 Pilots. I didn't even follow them much. But so much FOMO, I just went in, bought the ticket, and went in. So it's very hard to resist, the kind of vibe that
Yeah,
concert. They get all the young
yeah.
artists. That's the good part.
Tens of thousands of people around you singing and vibing. That's something you cannot recreate in any other experience in life. So those are
Yeah,
fun.
yeah. The differentiator, you also liked it, so maybe I'm on the right track. Mental health and patient capital. So, you know, some ideas they need a lot of patience. I mean, you cannot expect them to give you returns in 7 years. I mean,
Yeah,
there are these kids again, a warehouse deal, telling you in good trust. These kids are coding every day to get us out of matrix. I mean, we all live in matrix, right? I don't know if you believe it. I'm gonna back them because I feel every day I'm living in a matrix. Especially when I'm seeing my phone, I'm looking at AI, showing me all these ads. I think it's all true. 1999, they came out with that movie.
yeah.
Uh, I have full conviction, and I think these guys are onto something. It may take 7 years, 10 years, 20 years. I don't know, but they'll get me out of the matrix at least.
Very cool. So you should always leave room for a few exotic bets of that nature in every cycle, is my take. So you're on track.
On
So
track again. See, but my problem is, with the VC model, why this 7 to 10 years thing? If who's gonna back these people who may take 15, 20 years?
it's a tough one. I think, markets are markets for a reason, right?
Mhm.
So they're called markets for a reason because
Yeah.
it's how the collection of uh, a collection of people perceive risk and reward, basically,
Mhm.
uh, and then the underlying financier of that has also got to buy in, right? So if I went and told what you said to, let's say, a fund of funds, they would throw me out of the room because they want to
Yeah.
see capital every
Yeah.
5, 6 years, right?
Yeah.
If you went to a college endowment which thinks it's protecting the money for the next 100 years, if not
Yeah.
more,
Yeah.
and you'll say, how can they think 100 years? That's because they've already protected some money for 100 years. That's how
Yeah.
old they are.
Yeah.
So there's nothing imaginary about it. They might take a view that they're okay with this, but not until you've proven that you've actually delivered capital on the other 90% of the non-crazy bets
Mm-hmm.
in a 12-year cycle. Because to your point, yes, there are some ideas which need more than that,
Yeah.
but 90% of entrepreneurial ideas don't seem to need more of that. And the
Yeah.
reason why venture is such a peculiar industry is because we've force fitted the idea of how quickly can you build and not build in a very natural way. You can't build it at your own pace.
Yeah.
So I joke about this that the venture people who work inside of the venture funded world and the people who work in the normal world are
Yeah.
working at different speeds. It's like
Mm-hmm.
It's like Einstein's theory, relativity of time, right? So
Yeah.
basically, you're essentially, since you brought up the matrix, this is also a relevant concept that
Great.
you're actually working at 2-3x the speed, determination, and scale build out than somebody would do in a normal firm.
Mm-hmm.
So it's not impossible. So my point is, the Chinese government is a great example. AI is a
Yeah.
great example, where markets have rallied to give, or governments for that matter, have colluded with markets to give enough capital to build at that speed artificially for a very long, sustained period of time, right?
Yeah.
And people know that it has 50-year effects and it might take 15, 20 years to build. But there is that capital, but it's very rare and it's not available to plebeians like you and me. Let's put it bluntly.
Yeah.
If you're Elon Musk, or if you're, if you've delivered outcomes, let's say, and so you'll say, how the hell do you expect me to deliver outcomes if I'm just starting tomorrow with 600 million? But, God willing, if you're 10 years out, you've delivered, let's say, 6 billion on that, right?
Mm-hmm.
People will be lined up out of your door, outside your door, and say, "What kind of risk do you want to take, buddy?
Yeah.
I'm going to give you, Vicky, I'm going to give you more and more capital. Why don't you
Yeah.
take 6 billion and put it to work and build out
Yeah.
a few more matrix escape mechanisms for me?" So,
Yeah.
I think it's just a function of how these cycles play out.
Yeah. Yeah. I mean, and I also feel that at times, and I've heard few VCs say that because of the tenure of and the stage of the fund, sometimes you have to let go of these crazy ideas if you're towards the end of the fund versus if you're in the starting, or the other way around. Actually, maybe the crazy ideas can give you more when you are towards the end of the fund. Have you
Yeah.
let go of some deals because of that at the what stage
Yeah.
of you are?
I think now I feel more confident that there is no sort of with every cycle. I think we get a little bit more confident that they should
Mm-hmm.
not be dependent on these the mediocrity of what is called fund life and fund cycle, and these are all
Yeah.
internal problems. There's
Yeah.
some dude called Bloom sitting in Mumbai. It's your problem. The world's not dependent on who Bloom is and what your fund cycle is, right?
Exactly.
I have to build irrespective of that. So
Yeah.
the way to insulate against that is you move to like a Westbridge or a GA model, which is semi-perpetuity capital, right?
Okay.
There is no concept of fund cycles, right? Again,
Mm-hmm.
but they've earned it over 25 and 20 and 40 years or whatever. But when you show that, the investors will say, these guys know what they're doing, just park the money with them, they'll just keep multiplying it, give us returns, and
Yeah.
the principal keeps getting deployed. So then there's no concept of that. But we know realistically we are nowhere close to that.
Yeah.
So then what happens is, if you feel like it's the last check of the cycle and it's too early, then two things can happen. You either try and push it out to the first check of the next cycle, which is
Mm-hmm.
kind of exactly where we are. We're trying to transition from fund 4 to fund 5. So that
Yeah.
happens in every fund manager's life. And the second is, because we are not tiny anymore, we used to be 20, 60, and 100. If you
Mm-hmm.
miss that first shot at taking the shot on goal, you were done.
Mm-hmm.
The playground became too big, right?
Yeah.
Now, theoretically, I can say I saw it. I thought it was too early, or I thought it was too late in my fund cycle.
Mm-hmm.
Let me pass and wait and watch rather. And then 2.5 years later, it looks like it's like 5x as good, but also 5x the valuation.
Yeah.
So I'm challenging myself and my partners to say, then pay up 5x,
Yeah.
right? Instead of 2 million, play 10 million,
Correct.
right?
Yeah.
And we haven't reached there yet, but that's the mental. So you talk about evolution of, how founders evolve. So we're trying to like be in that same frame of mind and say, don't get into these traps, right?
Yeah.
Try to keep evolving every cycle. But you have to have incredible conviction. You have to 5x the conviction, because God forbid that bet fails. There will be
Yeah.
stones thrown at you by the LPs saying,
Yeah.
who told you you can sign up for taking this kind of risk? That's not
Correct.
what you pay. So be careful what you wish for. But I think it's possible. It's possible to keep evolving and becoming a better and better player in the market,
Yeah.
following that conviction that you want to, Ricky.
Nice. Nice. I'm gonna do that. Changing gears here, I saw some interesting slides, which may not take a lot of time, but there's this slide which says that Delhi investments gave you what, almost 15x.
Yeah. No, we have a joke about that. Yeah, so two things. I think firstly, we didn't have anybody in Delhi for the first 4 5 years, right?
Yeah. Okay.
Not that we had people in Bangalore either, but
Yeah.
Delhi also as a investor ecosystem is thinner than Bangalore, right?
Hmm.
And so it was not like you were getting hot referrals. I mean, even as an angel ecosystem is a little thinner than Bangalore, right?
Yeah.
So not now. I'm talking about this is all 2011 to 14 data, right?
11,
So
11, 14. Yeah.
yeah,
Correct.
very different era, but I think people were wary of Delhi, including us. We said like Delhi guys seem a little trippy. Are they edgy or they like out of bounds or like you don't know whether they give you enough comfort
Yeah.
on
Am I
saying that
giving you enough comfort?
yeah, you're on that edge, like 600
Honest
million first
answer.
fund,
Okay.
600 million first fund, like I don't know whether it's ballsy or like it's over the top or whatever it is. So
I
that's
mean,
what you
they're
like. That's
ballsy
what
for
you like
sure.
about Delhi founders, though.
Yeah.
They're aggressive, they're gutsy. Pardon the French, I use ballsy, but basically that's what they are. And that's not what Bombay people are, and that's not what people with in Bombay who have more South Indian origins are. So you go to that DNA, and that's like it's a little bit of a culture shock. Despite me studying in Roorkee for 4 years and being
Mhm.
exposed to the Bihar, Delhi cultures, all mingled as in my growing years from 17
Yeah.
to 20. It was great training, and I'm not kidding you. If I had not had that training, I wouldn't be able to do half the deals I do in Delhi,
Yeah.
right? Yeah, it's a conditioning, right?
It
You have to be
is.
able to vibe with the founder's mindset, right?
Yeah.
And which is why there is a natural polar bias towards like from certain VCs to certain markets. I feel, and
Yeah.
I think we took a little while overcoming that. So
Hmm.
we still have a relatively cool inside joke with no casting no aspersions or with no disrespect to other people's daily portfolios. We think we have like like the upper crust of like daily founders in our portfolio,
Yeah.
right? Like and in terms of mindset, not I'm not saying performance or anything, right?
Hmm.
Don't get me wrong. Somebody might outperform and whip our founders
Yeah.
backsides, but I'm saying we just like the founders we've backed.
Yeah.
That is double the effort in Delhi, I feel, right?
Yeah.
Because it's a very different cultural vibe, and not everybody in my team is attuned to it.
Yeah.
Uh, I think Sajid, Arpit, and me have taken most of the Delhi bets in some
Yeah.
sense.
Yeah.
But back then, I didn't have Sajid and Arpit, so that
Yeah.
explains.
Sure, sure. No, good to know. That was a good discussion about it. I mean, I didn't plan to think, but yeah, when once you told me that there is some edginess that you like too, so good to know. But hey, you know, we wanna focus on a couple more things before
Yeah,
we wrap up. I feel all these slides can be used to tell a story. I like the slide that you've thought about the whole smorgasbord of investment styles. I can
yeah,
update this with what's going on right now in Venture 2.0. I mean,
that's good.
to create a 3.0.
Yeah.
I mean, I love, again, the examples of India, the nuances. This is a perfect framework to create a pitch deck for a VC to go raise money, I feel.
Yeah, as a first-time manager, you have not many options but to actually explain. And by the way, nowadays I tell a lot of people, like I said, yes, I'm an ambassador for India. I was
Yeah.
also industry association chair and whatnot. So it's part of the DNA now. But
Mhm.
if I have to sell India anymore, then it has to be a different avatar. It's not for my fund because
Yeah.
if I have to sell India, he's not going to put money in my fund. Back
Yeah.
then, you had to sell India too, by the way,
Yeah. Yeah.
right? You had to make because a lot of people just weren't aware. I mean,
Mm.
today Modi's hanging out with Trump out there and getting a lot of press and publicity, but Valentine's Day cover equivalent on New York Times and WSJ. But I'm just saying these were not prevalent before, and
Yeah.
so you to tell them, oh, there is actually a tech ecosystem in India, and even
Yeah.
today people like say, yeah, whatever. What are you telling us in Silicon Valley?
Lovely, lovely. I have a rapid fire for you. I mean, they said that I should talk about that. I mean, Chetan had left like a
Is he is
rapid
he
fire.
is he is he doing okay with this parking situation?
I don't know
Okay.
where he is. He's not here yet, so I'm
Yeah.
hoping that he's not. I don't think so. He's
Yeah, just
okay.
make sure after we're done in the next few minutes, just make sure he's okay.
I'm obviously gonna
Yeah,
go and
he
check.
set this up, but like you've done a commendable job of filling in for him. Yeah,
Really? Okay. So I'm better than him. Then that means
this
good
avatar
to
is
know.
good.
Good to know. Rapid
Yeah,
fire for you, Karthik. You must have done it few times, but I think this would really bring out your personal side. We need to
sure.
touch upon that. So know Karthik as a person also more. First question is, what does Chennai has that Mumbai doesn't?
Chennai has a sense of calm, and it has brilliant beach. Mumbai, you can't even call them beaches.
Yeah, that's true. That's true. Best restaurant to eat butter chicken.
I liked this place, Golia's, though recently I looked at the ratings. I was going to order from there and it was pretty terrible. He featured on MasterChef in Bombay, in MasterChef Australia. So I liked it. But yeah, go to is like Delhi Darbar.
Delhi Darbar.
Yeah, yeah.
Lovely, lovely. That's a good place. Guns and Roses or ACDC?
I like AC/DC, but like I'm a little bit more sappy in my music choices. So Guns N' Roses.
Guns and Roses. Favorite
Yeah.
song?
Favorite song, man. That's a tough one. It's tough because I almost think my core is about like loving too many things at the same time. It's the same approach in venture. It's the same approach in music.
In music, but let's restrict it to Guns and Roses. Even there, you don't have a favorite song of them.
I mean, it's November Rain, obviously. I
November
mean,
Rain.
yeah,
Yeah, yeah,
just the operatic. It feels like an operatic production.
yeah.
And I think in the 80s, if you grew up in the 80s, 90s, you got very seduced by the visuals of the videos.
Him getting on the top of the piano,
Yeah,
right?
yeah. So those are lost today because you don't see as many videos
Yeah,
there because there was no internet and it was all television. You
yeah.
grew up on music videos, and
Exactly,
those influenced your loves a lot more than even the music.
exactly.
Yeah,
Yeah, yeah, yeah, yeah. We
it was
don't see
performance
those.
art. It was not just music; it was performance art.
Exactly. We missed that. Yeah, we missed that. One concert you wished you attended.
Yeah, I still haven't done the national. I love their music. Strangely, I have a 16-year-old and wife and me. Like bizarrely, it's like the most common band we listen to together. Like this oldish Midwestern, like American band. But
What is it called?
I've
National.
missed them like thrice. So like by like 2 days, like I was in San Francisco, but I had to get back. It's called the National.
The National. Oh, okay.
Yeah.
That's
Yeah.
that's something new for me to go back and
Yeah, yeah,
listen.
listen to them. I think they've done like a couple of with Taylor Swift, and they jam well with some of even the new musicians. But we love their
Lovely,
music. Uh,
lovely, lovely. Good to know. Good find. Thank you. The Nationals. Which MBA was better though, out of the two?
Super tough. I'm biased towards the Wharton one because I met my wife at art school there. So we
Okay.
both, enrolled and graduated like a week and a day apart.
Yeah.
So it was a great time. I mean, if you have campus romance, you can't
Yeah.
like, you can't. I mean, all my friends at IMB are great, but like, this one's tough to beat.
Obviously. And who asked who? Like, how did that happen? Anybody knows
I
that
think I
story?
moved much faster than she expected, but I think I was also a few years older, and in my head, I was already
Hmm.
under like enough pressure from home about thinking about marriage. So I think those iterations had happened in my head, and I was not interested in falling into the trap of like a classic arranged marriage.
Yeah.
And so you create, as every time you go through that iteration, you create a sense of like who that person could be. So
Yeah.
I feel like, yeah, my wife just fit into a lot of those as soon as I met her for the first few weeks. So yeah, much faster than I expected, but I guess it was meant to be.
Meant to be. Lovely. You are that kind of a romantic person, and intuition, romance. I mean, I think they play a big role in what you do, I feel.
Yeah, it's kind of, I think, it's like how say animals sense. We're all animals at the end of the day, and you
Yeah.
sense certain aspects of the other animal in front of you, right? So it's a certain energy. So I guess it doesn't hurt.
Yeah.
Founders want to know they have someone like that on their side,
Yeah.
and when you exude that, you don't have to like speak it out or like write sweet nothings, right? It's just there in the
Yeah.
air. So if they get that sense, then they tend to like want to collaborate and work with you, want to make you like happy and proud as like a fellow partner and backer, and it's a nice vibe. So I think that's been my guiding philosophy, at least at Bloom. And the results are all not out yet, but since I've promised to write Omega ad infinitum, you'll keep
Yeah.
seeing them. there's no
Lovely.
there's no hurry, right? So you just have to wait with bated breath on when these cycles get done, and there'll be more and more new data. So it'll be fun.
Yeah, I think you must have really resonated hard with that line in Interstellar that my love for my daughter is quantifiable. Do you remember that line? I don't know if you've seen the movie or that.
I've seen it, but it's been a
Yeah,
while since
yeah,
somebody reminded me that I should catch up with it again. But
yeah.
yeah, so yeah, in some sense, that's what's happening with the Omega, right? So it's like
Yeah,
all of these emotions for like 5 years or 10 years or 20, 15 years of partnerships and work. You got to
yeah.
put some numbers to it and say what is all that worth? And in a crude way, that's what we're doing. We're quantifying that.
You are quantifying that. Lovely. And quick ones, Bangalore Villa or Delhi Villa? I know the Delhi Villa is no more there now, I guess, right?
Even then, I think Bangalore would always win because Delhi, while it was on the main road and I mean, it was tucked away, but it was still on the main road and
Yeah,
it have the same vibe outside. Whereas Bangalore is tucked away in a way that it's designed to actually step out and walk.
yeah.
And so sometimes my days and evenings both end with like a founder walk. So how can you complain, right?
Oh,
So
nice. Yeah,
goes
I love
back to like
it.
it goes
Yeah, yeah.
back to the romancing element of it. Yeah.
See, romance is everywhere for sure. French Open or Wimbledon?
Always Wimbledon for me. I can't handle French much. I don't even
So,
watch it much. Yeah.
so it's Federer over Nadal?
Yeah, kind of. Yeah, I've always liked the grass court players. So like, and I think with each era you find yourself evolving, but I think I liked my love for tennis started with John McEnroe, who's like the opposite of like a Federer in terms of composure, and he's impish, bratish, but that was teenage years, right? And so, and as you grow, your tastes change in terms of who you want to associate yourself with.
Yeah.
That's what I've realized as you back individual players you fall in love with. I'm more ambivalent in football clubs, but I don't have a necessarily a favorite. But when it comes to individuals, I've seen that it's as the cycles turn, it's a how your persona matches with theirs at that point of time.
Yeah, yeah. So, Edgy, you mentioned again, that's why the love for Delhi founders, right? Because
Yeah,
McEnroe was definitely edgy.
yeah.
He had that personality. What football club, by the way? I mean, you said ambivalent, but which one you like right
Like
now?
my brother is a big Man U fan when he was growing up, and I had left for college, and so cable TV really kicked in after I was in college. So he
Yeah,
developed a love, and so he pulled me into it. That's what happens in most families. Either
yeah,
your girlfriend or boyfriend or sibling or father
exactly.
sort of brings you in. That's the club aspect of sports, I think. So in my case, it was my brother. So there is always this like little soft corner for Man U, even if I can only relate to three players. I'm watching it. It'll feel like, oh, it'll be good if they score. But now it's kind of like I'm now moving towards who's the better team, and like now I have different friends in Bombay cheering different clubs. So
Yeah.
depending on the year, depending on it's mostly
Good,
English, but not
good
too many
year.
of my friends follow German, French, and
Oh, German
Italian.
as well. Yeah. No, no.
Yeah.
Good time to move away from United anyway. Not a good time.
No, I'm not. So that was there for the first decade or so. Now it's not as prominent.
I'm
It's
a
not like
huge, I'm a
I don't
huge,
wear jerseys of any of these clubs. That's
yeah,
that.
yeah. Okay,
Yeah,
okay,
yeah.
good to know. I'm a huge Liverpool fan, so I'm glad you're moving away from United love.
No, they're having a great season. I'm wishing you luck. One more win this year would be good. Like if they can
Yeah, yeah.
make it. Yeah.
That's what we're hoping for. I've been fan since 2005, the Istanbul night, the miracle of Istanbul. So I've seen the downs as well.
Uh,
So
tough, tough
finally,
to be a tough to be a club fan anywhere at any time in the world.
yeah, but lovely, lovely, good to know. So Messi or Ronaldo, last one because we mentioned football.
More Messi, though. Like when he's up against some of my favorite teams, sometimes I'm conflicted. But yeah, more Messi. I'm like persona wise, Messi. But like I like his game. I don't. I'm not a huge fan anymore of the Argentinians. I used to be in the Maradona phase, but I think
Maradona
I've
phase.
evolved. Right, I'm a more Brazil guy. I like the eccentricity and the passion and the
Yeah.
romanticism of football, which only the Brazilians can show. Everybody
Well,
else is too mechanical for me.
yeah, no, well, lovely. I think the word of the day today was romance. This was an amazing talk. Thank you for doing this. I mean, I'm very motivated for my 600 million fund now. I mean, I've got all kind of validation, but with caution. I have a better game plan after I think the things you discuss. One of the key takeaways was how you measure the probability. Taking things into account. I think that was something that have got me thinking. Now I'm gonna go back to my cousin Jazz again. Your probability has come down a little on that rat trap idea.
Yeah. No, so that's the thing. I think you got to train your mind to also play your own devil's advocate and keep challenging and questioning and not falling. I mean, since we romance is the topic, I think the early days we used to get into that phase of like, I like it, I like it. I'm not going to question it again. And in venture, unlike life, you have to be more practical about
Yeah,
continuing to question whether that romantic notion of, oh, this can be become big and I love this founder, is that something that you want to not challenge? I think you should be challenging it all the time, and that's
yeah,
what a bigger firm and IC and members and team members help you do.
yeah.
They have no attachment, so they'll trash the plan, right? And then it makes you question things, and so life gets back into its own rhythm and order.
I think you get that balance. But great chat. I'm gonna check on Chetan now, and we'll
Yeah,
let.
make sure he's safe, and thanks for having me. And I know you were thinking of whether you want to do one more of these later. We'll think about that if you're
For
not
sure.
comfortable.
I think there are a lot more here. Probably if you don't want to talk to Chetan, you can bypass him and just, I'll shoot you a message for sure. And I have
Adios,
more
adios.
things to talk, by the way, but
Uh,
we'll set up time more so we go more deeper. And I'll also have some traction of talking to LPs. So maybe I can ask you more relevant questions. So let's do that later, maybe a couple of months down the line.
Super. You get some sleep there, that part of the world, and good luck with everything with Raccoon.
Cheers.
Bye.
Bye bye. Take care.